All right, so if you own an S-Corp and you have not set up payroll to pay yourself a reasonable salary, then you are at risk of getting into some serious trouble with the IRS. All right, so first of all, paying yourself wages is a requirement as an S-Corp. This is not just something that you should do, this is something that you have to do. And if you do not, you are simply inviting the IRS to audit you. But not only that, you also risk paying way more money in taxes, penalties, interest, and so on. If you do not pay yourself a reasonable salary from your S-Corp, the IRS can come in and pick an amount for you, which will likely be subject to thousands of dollars of employment taxes amongst other penalties that they might assess. But you can avoid all of this headache by simply following the steps that I'm about to give you in this video. My name is Sherman, the CPA, and I have helped hundreds of business owners set up payroll for their S-Corps at mycpacoach.com. I have formed S-Corps, I've represented clients to the IRS about their S-Corp issues, and most importantly, I know the simplest and easiest ways to comply with this requirement. Even if it's at the end of the year and you have not done any payroll at all, I'm going to give you some simple workarounds to get this all caught up in one simple step. So go ahead and save this video, comment if you have any questions, and make sure you subscribe for more guidance to less stress and lower taxes. All right, so let's start by helping you determine how much to actually pay yourself, and then I will walk you through the easiest steps to get this done so you can get back to running your business. Step number 1, determine a reasonable salary to pay yourself. So the IRS specifically states that shareholder employees of S corporations must pay themselves a reasonable compensation for the services they provide to their company. They require you to do this because all W-2 wages are subject to employment tax, and the government wants to collect as much of those taxes as possible to fund Social Security, Medicare, and so on. So as an S-Corp, you are supposed to be paid a W-2 salary as an employee for the work you do in your business. And typically the IRS wants the W-2 to be higher so they can collect more taxes, and my business owners want it to be lower so they pay less payroll tax. By the way, keep in mind that as the owner of an S-Corp, you can still pay yourself owner distributions from remaining profits after paying your W-2 salary. Your owner distributions are not subject to payroll taxes. So in short, you just need to pay yourself a W-2 to satisfy the IRS requirement and then take the rest in owner's distributions. But the biggest question I get asked related to this is, well, how much should my reasonable salary be? So the IRS wants you to determine that based on the type of work you do for your business and how much it would cost you to hire an employee to do similar work. They do provide some general factors to help you determine this, like your training and experience, duties and responsibilities, or the amount of time and effort you devote to the business, and so on. As a general rule of thumb, most tax professionals believe that your reasonable compensation should be somewhere around 30 to 40% of your business profits. But that's just general advice. It can be lower or higher depending on several factors, like the size of your business, how much income the business earns, and your level of involvement in that business. For example, a doctor that is responsible for earning every dollar in their company might take 40% of the business profits as their reasonable salary, whereas someone who just spends a few hours a week doing admin work for their company might take 10% of their business profits as a salary. At the end of the day, you just need to determine how much you would pay someone else to do the same task that you do for your company and submit that as your reasonable salary. Do not overcomplicate this. Most people who get in trouble with reasonable comp fail to take anything, so you're already doing better than most people by trying to comply with this vague requirement. Pick a number that you can justify and use it as your reasonable salary. Then you can move on to the next step here. Step number 2, set up payroll for your business. A good payroll provider will do 3 things for you at a minimum. Number 1, they will allow you to pay yourself and calculate payroll taxes on your behalf. 2, they will withhold those payroll taxes from your checks and pay them on your behalf. And 3, they will file all payroll tax returns on your behalf and issue your W-2 to you at the end of the year. Now, to get this set up, all you have to do is purchase a payroll plan, and they will guide you through some simple registration steps to get everything connected. Most payroll plans pricing starts at around 40 to 60 bucks a month, which is a very small cost in comparison to the tax benefits of an S corporation. In terms of picking a provider, most people use Gusto, ADP, or QuickBooks. As a CPA, I've used all 3 of them, and I personally prefer Gusto. But because I work with all 3 of these companies, I have some exclusive discounts for you, and I'll link those in the description of this video to help you save some money while you get this set up. Also, if you want an in-depth comparison, I have a full video breakdown on our channel here, so be sure to subscribe and check that out. All right, step number 3, Backpay your reasonable compensation. All right, so once you have purchased your payroll plan and completed the setup steps, all you need to do now is pay yourself. But normally people are setting this up in the middle or end of the year, which makes this step a little complicated because you need to pay yourself a salary for the entire year. For example, let's say you set up payroll in December and you need to take a $50,000 reasonable salary for the year. Well, if you put $50,000 in your payroll provider as your annual salary, it will likely only pay you 1/12 of that amount, because a salary is typically paid over 12 months, not 1. So if you're setting this up late, you will want to back pay yourself for wages you missed in earlier months in the tax year. Now, there are a number of different ways to accomplish this, but the easiest solution is to just pay yourself a one-time bonus to back pay your reasonable compensation. This will allow you to submit a lump sum payment within any date range. You can submit your entire salary for the whole year as a bonus, or submit a bonus for the time period where wages were not submitted. But the bottom line here is that you will want to run the entire amount of your reasonable compensation through your payroll provider by the end of the year. That way they will be able to prepare your W-2, which is evidence that you submitted your S-Corp compensation for the tax year. Step number 4, pay yourself wages on a consistent basis. Once you have back paid your wages through your S-Corp, you should establish a rhythm with how you will pay your wages going forward. Now, some business owners prefer to wait until the end of the tax year to pay their reasonable comp, which allows them to have more cash on hand for their business throughout the year. And if you decide to do that, then you will need to use the back pay method similar to what we discussed in step 3. Now, alternatively, you can set up weekly, bi-weekly, or monthly payroll cycles to pay yourself on a consistent basis throughout the year. And you can automate this entire process. Then, as long as you do not miss any payroll cycles, you would have paid yourself the exact amount of money that you planned on, which means that you should receive a W-2 that reflects your reasonable compensation in the following year, and then you'll be compliant with the IRS S-Corp requirements. We have several more videos that address other key areas of S-Corps, from paying your estimated taxes to the best tax write-offs to save on taxes. So be sure to subscribe if you want to learn more about that. And if you need immediate assistance, like right now, go ahead and go to mycpacoach.com to get a tax plan that is guaranteed to save you thousands of dollars in taxes.